Something truly significant has just taken place in China's financial markets. For the first time in decades, the long-standing hierarchy among its largest banks has been completely upended. We're here to deconstruct exactly how and why this happened.
In August of 2025, Agricultural Bank of China, or ABC, officially surpassed the Industrial and Commercial Bank of China in market capitalization. Now, to be clear, for decades, ICBC was the undisputed leader. So this moment, it really marks a historic changing of the guard in one of the world's most important banking sectors.
And you might be tempted to think this was just a fleeting market accident, a temporary blip. But it wasn't. What we're witnessing is a deep, structural reevaluation by the market, a brand new consensus on what a superior, more resilient business model looks like in today's economic environment.
So let's unpack this. This reevaluation is really built on three distinct pillars of value. These pillars signal the market's newfound conviction in the Agricultural Bank of China.
The first pillar? It's all about profitability certainty. You see, in a climate of increased economic uncertainty, the market's preferences have clearly shifted. Investors are now placing a huge premium not just on the potential for profit, but on the predictability and the stability of those earnings.
And that brings us to this number, 295%. This figure represents ABC's provision coverage ratio. It's a key metric that shows a bank's capacity to absorb any potential loan losses. Simply put, a higher ratio means a much larger safety buffer.
And the scale of this buffer is, well, it's substantial. At 295%, ABC's coverage isn't just above the regulatory minimum of 150, it blows past the industry average too. This gives it a significant capacity to smooth out its earnings and maintain stability, and that's a quality the market clearly values right now.
Okay, pillar number two, the appeal of high dividends. It's pretty straightforward. In a world of low interest rates, consistent, reliable shareholder returns become a powerful magnet for capital, especially for those big, long-term institutional investors.
ABC has consistently delivered a dividend yield right around 5%. Now, a figure like that is incredibly attractive to investors like insurance funds, which need those stable, predictable cash flows. This policy doesn't just signal a commitment to shareholders, it's a testament to the underlying strength of the bank's earnings.
The third pillar is a bit more technical. It's a structural factor tied to China's domestic A-share market. Now, this didn't cause the reevaluation, but it certainly amplified its effect, and it helps explain the exact timing of the market cap crossover. If you look at the numbers, Agricultural Bank of China simply has a larger free float of A-shares than ICBC. We're talking a difference of almost 50 billion shares. So as the market began repricing ABC's stock based on its strong fundamentals, that larger share base gave it a technical leg up in surpassing ICBC's A-share market cap.
So we have the fundamental pillars, but what was the actual catalyst? The decisive moment? That was the bank's second quarter performance for 2025. Those results really confirmed the shift in perception and showed just how resilient its business model had become.
The Q2 data is really revealing. You can see that while net interest income contracted by about 3%, which was in line with the rest of the industry, fee and commission income grew by over 32%. This huge expansion, really driven by wealth management, more than offset the interest income decline and actually led to an acceleration in net profit growth.
And this chart here really visualizes that dynamic shift. You can see the engine of profit is fundamentally changing. That growing slice from fee and commission income proves a successful strategic pivot, and it's building a much more diversified and resilient earnings base for the future.
Now, the Q2 results were the catalyst for sure, but the long-term foundation of ABC's value, that lies in its unique, deeply entrenched strategic position. This is what analysts call its Sannong moat, its intense focus on agriculture, rural areas, and farmers.
And let's talk about the scale here. We're looking at 10 trillion RMB. That's the value of ABC's loans just in China's county-level regions. It's a massive market segment where the bank is, without a doubt, the dominant player.
And that massive loan book translates directly to the bottom line. This isn't some niche part of the business. County-level finance, or Sannong, contributes nearly half of the bank's total revenue. It is the absolute bedrock of its entire operation.
So what does this strategic focus actually give them? Well, four very distinct advantages. First, you have a network of over 22,000 rural branches. That's a huge physical barrier to entry. Second, these communities provide a structural source of stable, low-cost deposits. Third, Decades of service have built incredible customer loyalty. And finally, it operates with far less competition than in the saturated urban markets. This is a classic, incredibly powerful business moat.
Okay, let's zoom out. What does this historic shift in leadership really signal for the broader market? Well, it suggests a change in the very definition of value for these large financial institutions.
We're seeing the market move from an old paradigm, one that prized sheer size and aggressive growth above all else. We're now in a new paradigm. And in this paradigm, value is defined by the certainty of earnings, the stability of the business model, and a consistent, tangible return of capital to shareholders. Agricultural Bank of China has really become the embodiment of this new definition.
And this leaves us with a final critical question to consider. The rise of Agricultural Bank of China is more than just the story of one company. It reflects a fundamental shift in investor psychology. And it forces us to ask, in an increasingly uncertain world, has stability itself become the ultimate, most valuable asset?